$317 trillion. Let that number sit for a second. Not million, not billion, it's trillion. That's how much debt the world is carrying right now. And here's the part that should make you stop and think. If the entire planet owes money, who exactly is the lender? Because debt doesn't just exist in the air. For every dollar owed, someone, somewhere, is supposed to be on the other side of that transaction. So who is it? Governments? Banks? Central banks printing money behind closed doors? Or is it us? That question sounds simple, but once you start pulling on that thread, the entire global financial system begins to unravel. And by the end of this video, you might never look at money the same way again. The world runs on debt. Let's start with something we rarely question. Debt is everywhere. Countries borrow to run their governments. Companies borrow to expand. People borrow to buy homes, cars, and sometimes just to survive. Debt has become so normal that we barely notice it anymore. But here's the thing. This has never happened at this scale before. Right now, global debt is over 3 times larger than the world's total economic output. That means we owe 3 years' worth of everything the planet produces, just to keep things running. And somehow, the system keeps moving forward. So how does that work? Well, because debt today isn't about paying things back quickly. It's about rolling it over. Governments borrow to pay off old debt. Banks lend money they don't physically have. Central banks step in when things get shaky. It's a giant loop of IOUs. As long as everyone believes the system will keep functioning tomorrow, it works. But belief is fragile. How did we even get here? Debt wasn't always a dirty word. In fact, for most of human history, debt was simple and local. You borrowed from a neighbor. You paid them back after harvest. But modern debt? That's a completely different animal. Today, debt isn't just money borrowed. It's a system. Governments borrow to fund social programs. Corporations borrow to expand operations. Households borrow to buy homes, cars, and education. And for decades, this worked beautifully. Interest rates stayed low. Economic growth kept pace. Everyone believed tomorrow would be better than today. So borrowing became normal, then expected, then essential. And slowly, quietly, the system grew massive. Today, global debt is more than 3 times the world's annual economic output. That has never happened before in recorded history. Who actually owns the debt? This is where things get interesting. When people hear government debt, they imagine foreign countries holding piles of US bonds in vaults. And yes, some of that exists. But the reality is more complicated. A large portion of government debt is owned by pension funds, insurance companies, central banks, and yes, everyday citizens through retirement accounts. That means when you hear the government owes trillions, part of that debt is actually owed to you. Strange, right? You're both the borrower and the lender in the same system. And then there are central banks, the quiet giants in the background. They create money by government bonds and stabilize markets when things get ugly. After 2008, and especially after 2020, central banks stepped in on a scale the world had never seen. Trillions of dollars were created digitally, almost overnight, not printed, typed into existence. That money flowed into financial markets, propping up assets and preventing collapse. It worked, but it came at a cost. The illusion of stability. Here's where things get tricky. When central banks inject money into the system, it doesn't spread evenly. Asset prices go up, stocks rise, real estate surges, but wages, they lag behind. So on paper, everything looks fine. Markets are up, GDP is growing, but underneath, people feel squeezed. Rent is higher. Groceries cost more. Savings don't stretch as far. This is the hidden effect of long-term debt expansion. It doesn't explode all at once. It slowly erodes purchasing power, and that's why so many people feel like they're working harder, just to stay in the same place. So who is really paying? The uncomfortable truth is, the real lenders in this system aren't banks or governments. They're future workers, future taxpayers, future generations. Every time debt increases, it's a claim on future productivity. It's a promise that someone, someday, will produce enough value to pay it back. That someone hasn't been born yet. And that's the quiet trade we've all accepted, often without realizing it. Why this matters now? You might be thinking, okay, but hasn't it always been like this? Yes, but not at this scale. What makes today different is speed. Debt is growing faster than the real economy. Interest costs are rising, and governments have less room to maneuver than ever before. That's why central banks are walking a tightrope. Raise rates too much, and you break the system. Keep them too low, and inflation eats away savings. There's no easy exit. And that's why conversations like this matter. What this means for you. This isn't about fear. It's about awareness. Understanding the system helps you make better decisions. About saving, about investing, about risk. It reminds you that money is not just numbers on a screen, it's a reflection of trust. Trust in institutions, trust in governments, trust in the future. And when trust shifts, everything else moves with it. Final thought, the real question. So let's come back to where we started. If the world owes $317 trillion and no one can clearly point to the lender, then maybe the real question isn't who is owed the money. Maybe the real question is, how long can a system built on confidence continue to run on faith alone? Because history shows us one thing very clearly. Every financial system lasts until it doesn't. And the people who understand that early are always the ones who adapt first. If you want the next episode, where we break down how people protect themselves during major financial transitions, make sure you're subscribed, because the next shift isn't coming someday. It's already starting.